I'm talking to Terence Saayman. He is risk management at the JSE. Talk to us about the JSE's role and where you see the regulatory impact that you've had in terms of regulating the financial markets prior to the crisis, and what that means going forward. So, what are the caveats that we face? I mean, South Africa is an easy example, but certainly let's then look at the greater economy in Africa.
Well, I think South Africa, the JSE has played a really great role in making sure that the players in the stock market and ensuring the flow of funds in the stock market happens in a credible and a way with security, making sure that brokers are adequately capitalized. Also through our derivatives exchange, we are ensure that we are a qualifying CCP so that banks don't hold excessive capital when they deal through us or when they clear through us.
But you've got the margining system, so that kind of mitigates that capitalization risk, right? So you've got the guarantee, you've got that central clearing, but it's purely for exchange. So, these are some of the caveats that we're finding in the OTC market, is that there aren't those same mechanisms. You've got them globally, but you don't have them in Africa.
That's right. Well, for the exchange-traded derivatives, okay, it's not just about margining. There's a whole bunch of principles, in fact 17 in total, that the Committee for Market Infrastructures, the Basel Committee for Market Infrastructures has put in place. And for a bank to get that capital relief, a CCP needs to qualify according to those principles. Furthermore, for OTC trades, these are risks that a bank should be capitalizing for, yes, because they're taking the risk. And so really the regulation is making banks, forcing them to have enough capital in case things go pear-shaped, like we saw in 2008, 2009.
So if we look at the bank capitalization, and what I wanted to ask you is it a hindrance to creating opportunity for consumers? Because ultimately banks should be creating lending opportunities and obviously saving opportunities to facilitate that flow of funds between the consumer and the end producer. So these new regulations and overcapitalization, are there better ways of doing it, more efficient ways of doing it? Or do you think that the OTC style markets are under a lot of pressure now with the regulatory reforms?
I think the OTC market is under pressure. However, I do think that that the regulation that's been put in place has been put in place with the greatest of intent, of good intent, and the regulation has been put in place there so that folk won't necessarily take on the same amount of risk and be exposed to the extent that they were previously.
So when we look at the JSE and the regulations, though, what it does do is it very clearly lines out what your expectations are around measuring that risk. So you on a day-to-day basis understand what your margining requirements are, Correct. Your procedures are in place, etc. Do you think that that's a caveat in terms of OTC? Do you think that that's something that they need to step up?
Well, I think Basel now stipulates what the minimum initial margin is, for example.
But is that enough?
Is that enough? That is a great question. Is that enough? Should banks be holding more than that, and hence requiring more capital from the market, which would essentially, as you say, drain even more liquidity from the market.
But then the flip side of that is, if you don't want to overcapitalize, or we don't have to have these huge capital implications, would we not be able to mitigate some of that if we have the correct procedures in place, or the correct regulations in place, or risk mitigating factors that are outside of just pure capitalization?
So if we had a CCP, for example, yes, if we had a local CCP, that would open up a whole bunch of opportunities to the local players. But for a CCP to be in place, you need clearing members.
Yes.
Okay, and so without clearing members, we can't put a CCP in place. And this is an area where the JSE has proven itself. We've shown that we can run an adequate CCP, but together with the market, it has to happen. We can't just go and build a CCP where there's no clearing members. Likewise, a bunch of clearing members can't come together and say, we want a CCP without the clearing house itself. And so it's a joint effort where all the market players needs to kind of get together, put everything behind and say, listen, let's work together to get something that's good for the market.
Well, thank you very much. And I think that what's been interesting for me, Terence, and from a JSE perspective and talking on panels over this duration of the last 2 days, has really been, it boils down to collaborative efforts. The lessons that you've learned, the things that the experience that you have, there are gaps in this market, but it is about collaborating better with our counterparts. We're not in competition, we're trying to create a better playing field and how to work that together. So encourage you to continue, add value to the African economies that are building in a plan that you have actually been walking for
Yes.
the last 20 years. And I look forward to seeing how the JSE impacts the rest of the global markets, and certainly from an African perspective.
Thank you, Bridget.